Today we're going to get into those shorter time frames. If you want to see some bigger time frames and what we were paying attention to on Saturday, well, we were just making sure we were aware that the daily chart turning down or crossing down on this MACD did give us those points of divergence. So now we have something bearish that we can really pay attention to, but that doesn't seem to be the most probable thing. The most probable thing is for this to back off and continue. And how would that really take place? And I think there's one way to kind of think about this going forward of what they would want to do before some kind of big drop or before some kind of trap to the downside. And I think it's just that we are most likely to experience some kind of trap early on in the week as we go into more earnings, as we start to get more data going into Wednesday, Thursday, and Friday. So we're going to be paying very close attention to how stocks behave early on. And in this video, we are going to give you those updated weekly expected moves that we use to calculate options, which I did see something very funny on the GameStop side of things. So we are going to touch on that in a little bit. Maybe I'll pop this up on the screen because that's what we're going to be talking about. And then the other part to this is we need to talk about those possible traps. So let's just quit fudging around here and just get into it. So the main thing we're going to be talking about are weekly expected moves and the traps we're setting. And we notice that for the SPY, we have 617.26 to the upside. You have 598.68 to the downside. This is our 68% zone. I just calculate using the options data. And if you've been here for a while, you know you kind of like these weekly expected moves now, don't you? So if you're new here, 32% chance to end by Friday close outside of these purple lines and a 68% chance to land in here. And what we look for are certain signals at the highs and lows to give us potential trade setups. And so if you stick around for a while, maybe even subscribe, you might end up liking these too. And we go live every single day. So if you want to subscribe, you want to come ask questions during the live show about them, hey, that's perfectly, we really invite that. We really like people coming to the live show. I think that's the most productive thing. So we now have 2 points to pay attention to, and I believe there will be some kind of trap set this week. And we're looking at the shorter time frames. We do notice that the 2 hour has crossed down on the MACD. We have gotten a solid confirmation of that 2 hour crossing down, but we have not lost the 5 yet. And we have a super small range for the daily for tomorrow. We have 610.32 to the upside and 605.62 to the downside. Now this could mean sideways price action or something is going to surprise people. And the 2 hours overall saying that we need to be pulling back. So this is where we're going to talk about the first trap. And I believe this would be the more probable one at this point. And this is how this overall move ends up going higher. So this would be, hey, we're going to see some kind of flush out as implied volatility is low and people aren't expecting anything. We might get this to flush out and set some kind of trap to the downside very early on in the week before we start to get data, before we start to get the FOMC, before we start to get even something like Apple earnings on the 31st on Friday. So we'll be paying attention to this downside move because this seems like the most probable thing at this point. But that doesn't mean we can't ignore the other side of things. We have to understand how we can be hurt if we really think this is going to happen, but price starts to disprove us. We need to be paying attention to how we could be wrong. And I think how can we pay attention to how we would be wrong? That's if we're going to make the topside trap. Now, the topside trap, why do I want to pay attention to a trap up in these areas? Because if they're trapping the bulls here and we still have this daily that does have divergence that we talked about on Saturday, and that starts to cross down towards the end of the week, right? Going into the 30th and 31st, you could still end up in this zone and maybe even confirming this signal, right, by the end of the week as these catch up. So this is very interesting, and this is something that's risky. I don't think it's the most probable, but I think it is something to be aware of. This would mean that the SPY is actually going to see some kind of uptrend move for a moment here and maybe make some kind of weakness going into Wednesday. Now, this would be very interesting, and this is something that wherever we set the trap, guys, we are going to be putting out a Patreon video if we're at one of these expected moves early on in the week, right? We like to talk about those, discuss what is going on, and what seems to be the most probable thing after we see more price action. And it's during market hours. So we don't put out this information after hours. This is something we put out during market hours. So you can go watch it for 5 minutes and then go pay attention to it in your charts. And that's fantastic. So the reason we would look for the trap to the upside is if we're going to go through something pretty bad, honestly, pretty bad. So that's what we're going to be paying attention to for the 30-minute is, do we actually go to the upside as we're still holding the 5? That way we know if I'm taking some kind of 2-hour short position and this 30-minute turns up, well, that's completely contradictory to my trade. It might mean my timing is off and I need to wait for this to play out and make that second point of divergence. I need to wait for this to play out and see if that makes a divergence to the upside to a weekly expected move. So those are just a couple of things I'd be paying attention to. I just think it's interesting that the implied volatility is very, very low going into Monday. But I still want to reiterate, I want to put this out at the end of talking about the SPY here, just the 2-hour pulling back down to a weekly expected move to fill a couple of gaps and then turn back up into positive territory is an overall good thing for this market to do. That has been a very, very massive run. Thank you for giving us the signals at the lows so that we could be a part of it. Thank you for going to hit our target. And now we have to just keep being patient and waiting for the market to show us the next opportunity. As this looks like some kind of short squeeze and it's very difficult to short, that opportunity is most likely to be a deeper pullback that actually turns up to the upside. Right. And the other thing is, I kind of want it to be a deeper pullback, but it could be sideways price action. We just want to pay attention to any time that 2 hour is down by the center line and curls up into positive territory. When that does happen, I'll be pretty confident in saying we're going to beat this high and end up going to make a new one. The Qs have made the lower high, right? We talked about that on Saturday. The Qs are making possibly a lower high, right? This is a potential lower high. It has not confirmed itself as a lower high, but we're going to be paying attention to that because that is kind of a major topping signal, right? So we're paying attention to it. But the 2 hour saying, hey, I'm pulling back. Hey, that's fine. Where's the first level we said to watch during a pullback? Well, the 5-day moving average, and that's this blue staggered line coming up. So we will notice that the MACD has crossed. We will notice that it's a solid crossing right now, and that suggests that we could have more work to be done. And look at that retest that could form going into possibly, Wednesday or Thursday. I really like it, and we will be putting out a Patreon video for that if that does happen. But 541.82 to the upside. This is interesting because it gets you up towards that monthly expected move, and then 517.44 to the downside for the weekly expected move. 68%. 32% to land outside of this by Friday close. So if we see this drop down dramatically early on in the week, don't sit there and listen as everyone starts to say crash, 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 crash. We will look at it. We will understand what is going on in the charts, and we will look for what is actually going on in these areas, because if we get there really quickly, it says we have a 68% chance to cross back above that purple line by Friday. And if you have a lot of time for that to base out down in these areas and then just curl up on Friday, that's something we'll be paying attention to. So that's the first trap I'd be watching, 517.44, or maybe this gap fill down all the way down in here. So something to notice at this top is we're actually relatively holding up well. So I kind of want to pay attention to the trap to the upside. That trap could just be on Monday, right? So I want to get daily expected moves, 533.19 to the upside. And we do have 526.07 to the downside. Very small range, very, very small range. But the first point we want to pay attention to, and maybe something that needs to happen here and why this could overall end up in the upward direction, is we didn't necessarily make the good divergence, right? Very flowy divergence on the MACD and RSI. This is a rejection divergence, which a lot of people like rejection divergence. I think, as far as my anecdotal data with my own trading, I've noticed that plays are a little bit better when you at least get some green bars there on the histogram and then you curl down. So that's just my personal thinking. This just shows me, hey, yeah, there's a rejection divergence, but overall, if we're paying attention to these type of divergences as well, when they're at the same time on the MACD and RSI, they tend to play out better with my anecdotal trading. So take that with a grain of salt. But the main thing we want to be paying attention to here is, hey, yeah, this has potential to be double top, but right now you're just at the lows. You're at the potential lows trying to hold up. You're testing the 5. So if this 30-minute curls up, it's completely contradictory to the 2 hour at this point. Now we could be just going to make that divergence on the MACD and RSI really quickly, right? Or this could be building all the way up still to the monthly expected move, where we see some kind of rapid move that kind of takes out these divergence points or makes a flat one. And then we end up seeing this, and then we go to the upside and we see some resistance up at these levels. This is a big trap I would be worried about, because monthly expected moves do hold resistance very, very well. And we're heading into the end of the month. So this would be a very interesting trap to see that ends up back down in it by Friday close. So I just pay attention to that as these monthly moves will be changing this weekend. So 30-minute, the trap to the upside, 30-minute trap to the upside is what we're going to pay attention to. The downside, the 2 hour trap to the downside is what we are going to overall pay attention to for the Qs. And it seems as simple as that right now. Apple, you just want to be very cautious with this. It's heading into earnings. You're outside of a monthly. You keep violating weekly expected moves for this thing. And we said overall, if Apple wants to end up going in the upward direction, what does it need to do? It needs to take back the 5, which what do we say when we want to take back the 5 or start some kind of uptrend? Well, you need exactly what I just drew. You need either a higher low to continue that upside and just continue a series of higher lows, or you need to dip down and make some kind of divergence to just confirm like, hey, this is a strong base. We don't care how it wants to do it. We're just sitting there going, just tell us it's a strong base and then we can make a decision. So that's what I'm paying attention to at this point. Apple has a chance for a big move this week. It has some big implied volatility. It has earnings going into Friday, and there's a lot going on with it because it's outside of a monthly expected move, which means by the end of the week, you actually could end up for Apple up in these areas, and it would make total sense for Apple to do so. So that's something I'll be paying attention to. Do I see the best signals from Apple right now? I wouldn't say so. I would be aware that this is overall a test of the 5 where that general area is. If this 2 hour crosses down, you could see a brief little divergence down here, and that would be a better look for this thing to attempt to turn around. It's showing a lot of weakness. As we go into the 30-minute, you're going to notice, hey, what are we overall trying to do? We're trying to confirm the move to take us above the 5 here. We're really trying to say, hey, yeah, this is going to be a higher low, and we're going to try to take back that 5 because you keep seeing the 30-minute curl up by the center line, which is great for your MACD. When it's by the center line, that's when you really see those higher lows. So right here, we notice that the hourly is just kind of wavy here. So the 30-minute, if that can take back the 5, that's great. But I wanted to give you something tighter than the 2 hour to react to. So if the hourly actually pulls down here, that's what I'd be paying attention to. And maybe you're looking for a downside weekly expected move or something like that. I think that's less likely because Apple has a bunch of implied volatility for earnings. So we'd overall be looking for some kind of divergence with this low if the hourly curled down. If the 30-minute can take back the 5 strongly, then you might start to make that series of higher lows. The key thing with Apple right now is going to be this is risky. This is not the strongest base in the world. You have a daily MACD that is seriously beat up here as you're down by the 200. And this is a level where I assume buyers will step in. But just because I assume something will happen does not mean I'm going to risk money behind it. I need to see something proven here to actually go to tell me like, hey, this has a high chance to go to the upside. All right, so what does that mean overall? I'm waiting for confirmations on a lot of things. I need to see that 5 taken back. I need to see if that hourly is going to cross down for the double dip, right? Those things will help me a lot more in making a decision. So patience with Apple is going to be a big thing, and waiting for confirmations is going to be helpful. Tesla, this looks like a rejection on the daily scale, and we were always talking about what? Going down to around 357.78. We really want a retest of the breakout area. That would be an interesting move overall, and then we'll see if it can stop, right? We'll see if it can stop there. So the 2 hour is pretty good here because if the 2 hour can confirm back up, you can retake that 5. Hey, we might just be making another higher low, and that'd be fantastic, right? You don't mind if Tesla goes up, right? But this here is the problem. That daily is really not looking the best. You're getting that rejection, and the 2 hour could just be falling here, and we're kind of holding pretty well there. So very interesting stuff. Something I would pay attention to is if early on we actually see a little lip here, or if we go down to lower levels, then make that lip for some kind of little head and shoulders to shoot us down to 357.78, and that's what I'd be watching. But to the bull side, it's kind of a double-edged sword because you're really looking for, can the bull side turn up? Even though the 2 hour is going negative and it looks really bad, this is still what I'd be watching. If it can take back that 5, that would say, hey, we can test this high, go make a new one. And maybe I just have a weekly expected move up here. So that's what I'd be watching for there. But the daily rejecting here is not a good sign. It is starting to add more and more credibility for some kind of move to test these lows, if not head all the way down to 357.78. So do I think Tesla is like the ultimate best setup for a bullish trade right now? No. Do I think it is the ultimate best setup for a short right now? No, I actually do not think that at this point. I am not willing to risk any money behind Tesla at this point. And it's unfortunate because there is some good things going on, but it's just not enough to really convince me like, yes, this move looks very highly probable at this point. So I'd be looking for traps, right? Look for the trap to the upside, look for the trap to the downside early on in the week. Amazon, we were pointing out, I'd be paying attention to Amazon if that daily MACD crosses. That is a very significant divergence. You just remember this, right? This was pretty flat, and then the MACD was not at the same time. This is a very good example of it not being on the MACD at the same time, right? Very flat, if not slightly up for the RSI, and not there on the MACD. And that's why we were like, hey, this just looks like a flag. I don't know why people are freaking out. Thank you, Amazon, for showing us the 2 hour divergence, which we called out and said, I'm taking Amazon. Amazon's been a great play, taking profit at the correct levels. Fantastic stuff. Really, really good. But if the daily crosses, that's bad. So does the daily have a good shot to cross here? The 2 hour is saying no. Okay, the 2 hour is saying not right now. Now, is the 2 hour saying I'm going to go for that right now? We actually have to go into the 30-minute a little bit here to discuss that, because this is some great sideways price action, which means I might have a weekly expected move. We might want to go chase that first before we can see this thing curl down. So the 2 hour has crossed here, but I just want you to notice how we have already started to violate that crossing. We are still above the 5. We've already violated that in the last bar here. So we'll see how this opens up. The 2 hour is slightly suggesting, yeah, some more downside or sideways price action would be necessary. But the 30-minute isn't saying that. The 30-minute is saying, hey, I'm really close to the center line and I potentially want to try to make an upward move. Now, why is the 30-minute saying that? Well, you have the RSI trying to confirm the next move higher. You have the price action trying to confirm the next move higher as you're holding very well, right? Pulling back with time overall and testing the 5, letting the 5 catch up for a test. So this does say to me, I need to be watching if this 30-minute MACD does curl up, if we see continued positivity, because that means we could have one more push left in Amazon. And then I'd watch out if any kind of divergence pops up here, because that's when it's going to be really leaning towards the 2 hour pullback if we see something like this. So there's just a few things to pay attention with Amazon. The riskiest thing is, hey, the daily confirming some downside there. The other thing that seems a little risky is some kind of 30-minute trap early on in the week to the upside. Hey, and sometimes rejection divergences actually do work out. I mean, look at the rejection divergence from Nvidia, just plainly giving you a double top here with the rejection divergence, super steep on the RSI and not able to hold up. But where is it going? It's just going to the 5, right? We're right on the 5 at this point. So if that 30-minute crosses up, I have to be aware that that can be positivity coming forward. I mean, overall, it's kind of like a low, a high, a higher low, a higher high, and then you kind of made this new high without making a pretty solid low. So if you want to include this whole thing as a high and then just say, hey, this is a higher low at this point and we're going to go make that next move, I would give you some credibility to that. I would just be watching out for traps, because something real fishy was going on here, right? Some big selling coming on there, some big investors getting out at that point. So I'd just be a little bit cautious as we get up to these areas, and I wouldn't expect, Nvidia can do it. That's great. I'm not going to bet money behind it. I would not be saying like Nvidia is going to go to $200 next week or something like that. I think a test of 150 would be great. If you can hold that and remain making those higher lows, you can continue up. But if we get a reversal signal and that drops too much, I'd just be watching out for more downside from Nvidia, because we have crossed over the 2 hour. So if the 2 hours crossed and saying, yeah, we need to pull back deeper, we were talking about pulling back to 140, 112 for a test, but overall, maybe testing in this little area in here, because this area has been very good. This is almost like a zone, and then we break out to the upside, we test inside of it to grab those buyers, and then we can make the next move higher. So I think that's what we're looking for. It's kind of like this on the 2 hour. You made a low, you've made a high in some kind of trend here, and then you're fishing for an area where you can find a higher low to go make a higher high. And then around that time, though, when all of this does form, I would be watching out for 2 hour divergences because of something really bad that happened the last time. So this is overall how I'm seeing Nvidia. It looks like, yeah, a lot of stocks look like this. They could make a 30-minute move higher early on in the week, but more so we're still watching for possibly a deeper pullback on the 2 hour. Meta, a little bit different, and I just wanted to talk about the 30-minute for the most part. Meta is seeing some great upside move, but the 30-minute pretty cooked here, and I think you really want to get another one of these tests of the 5, right? The times where you just didn't test the 5 and you saw this upward move, you notice that the next move when you tested the 5, we see a drop, and that's the risk here, is as you go up and it gets more and more tired, you could see that dip down, and if that's too big of a gap between like the price action and the 5, you could be dropping almost into what? Negative territory. And you notice this is what happened in the past, right? In these areas, we got excited and then we ended up dropping as we had a weekly expected move up in these areas, right? We had a weekly expected move here. So very, very helpful for Meta. If you want to get those Patreon, guys, join the Patreon. It's always at the end of the month. I like to mention Patreon because you get a ton of value, right? You get monthly expected moves. We put daily expected moves out for Fridays for all of these stocks. And we put out weekly expected moves every single Sunday for these stocks. It's actually up on Patreon right now. If you join, you can pause the video. You can go get those weekly expected moves and put up the weekly expected moves for Meta right here and start to formulate your plan, and that's very, very cool. It's only $7 a month. Cup of coffee, give it a try for a month. So in this area, though, we were able to go negative, and that's what you kind of risk. You risk a bunch of selling to come in that shoots you into negative territory, and that's kind of a bad thing at this point for Meta, as it's pretty damn overbought on the 30 minutes. So we are looking for that test, but this could not be done yet. I don't think there's like a trade setup for it, but I'd be looking for that retest of the 5, and then see if that's able to hold up, and then maybe we'll go make some kind of 30-minute divergence where this goes like this in the future, and then we can pay attention to it for the overall 2-hour pullback. The 2-hour pullback is something we want to talk about. It is overbought. You're breaking through. This is fantastic. Strong move out the gate, but we like retests. And something I'm going to do here is just show you something, which is this was kind of a wild time, right? And then we see this breakout moment. And what do we do right after we break out and see that strong move? We go retest into these highs in here, which is fantastic because you get the retest, you see that support, and then it shoots to the upside. Notice the second move was actually stronger here. So that's fantastic for Meta, but we can see that the 2-hour is cooked. So 30-minute, maybe we have more time in that, right? But overall, it looks like the 2-hour would need to dip down to maybe get a retest of this general area again soon. So I'm just talking about how pullbacks, we're looking for the next opportunity. A 2-hour pullback opportunity is probably the best thing I'm waiting for Meta. I'm going to get into AMC and GME, and this is where it gets interesting for GME. We're going to show you something very interesting in a moment, but 412, right? We need to update this level for you. So let's do that right now, just real quick. 412 is the area for last week you needed to break through to see something crazy. As of this week, it's 379. That's right. And this is what I wanted to talk about with GME, but we slightly see it, I believe, for AMC as well. Let me just double check. Yeah, AMC actually having below 100% implied volatility for like the first time, and I want to say months. Okay, AMC has had over 100% implied volatility for like months for these weekly expected moves. You don't see that at this point, and this is trying to be a higher low. So it's trying to say like I'm good, but you're getting a lot of wonkiness. You're still below the 5. So that's a problem. So what I'd be paying attention to is, can we get a solid green bar above the 5? That would mean, hey, we might make an attempt to get through 379. You guys know that a short squeeze is never the most probable thing. So you need to do something crazy. And that means you need to break through 379. You need to hold that level, because this is really where the fight begins. This is where they usually try to do some shorting and things like that, or profit taking, right? So we need to break through that very cleanly. If we can get a solid confirmation here, I think we have a chance to do so. So that's what I'll be paying attention to for AMC. To the downside, just if this 2-hour crosses at any point, you're probably testing the low, going to make a new one. We could end up down by $3. We could end up down to 292, and we're going to get new monthly expected moves. So you're kind of hoping that AMC starts to make an uptick this week, actually. I think you want this thing to start moving higher this week, or else it's at risk of seeing a monthly move of like 250 or something like that, and we don't like to see that. Now, as far as GME goes, we need to update that level as well. This is what I really wanted to talk about. And you probably saw me flash that number up on the screen, right? You probably saw me flash that number up on the screen. And that's a big deal, because GME, this is the lowest I have ever seen the implied volatility for GME. Let me repeat that. This is the lowest I have ever seen the implied volatility for GME. And the implied volatility right now is giving you a level here for the options data, right? The calculation that tells us if something crazy is going to happen. 29.89. If you're able to take $30 back this week, see a daily close above $30 this week, that will be a big deal. They will, potentially these sellers would have to seriously put some money to push this thing down at that point, right? We talk about manipulation with GME. I know a lot of people say like, oh, they just magically manipulate. No, they have to risk money to manipulate this stock. Just so you're aware, they're risking money to manipulate the stock. Anytime that they push the stock down, like this aggressive one with the sell signals that we were pointing out, anytime they do this, it costs them money, just so you are aware. So there will be a point where it's probably not worth risking the money anymore to suppress GME, because the buyers are still holding. And then they're going to say, okay, well, the risk is too high. We cannot continue to do this. We need to get out of those positions. And that's when the squeeze can happen. So 29.89 is where you need to see something crazy. You have an implied volatility this week of literally 65%. And that sounds high. It sounds like Tesla, right? Tesla's always between 60% to like 90%, has pretty high implied volatility, but GME usually has anywhere from 80% to like 150% implied volatility. And this is the first time ever I'm seeing it, sub 70%. So that's very interesting. The structure here isn't bad. You're reacting to a good level to potentially make a head and shoulders to break through these wicks up in here. So I think it's okay. But if that 2 hour turns down, that's a bad thing, right? Let's talk about the bearish thing. That's if the 2 hour can cross down, and a lot of this price action is suggesting that, but you're still trying to hold the 5 at this moment. So if this is going to whip back up, what do I need to see? I need to see this 30-minute that is by the center line turn up into positive territory. And man, if you look at this and the implied volatility is that low, look how close that 29.89 is. If some big buyer steps in this week and the short sellers don't expect it, right? Even profit takers at these levels don't expect it, you could start to see this thing cook. So I'd be paying attention to it. I'm paying attention to it right now. If this thing curls up on a 30-minute, I'm potentially buying an option for GME for a month here. So hopefully you find that helpful, but the most helpful thing is have this on your chart. Pay attention if the 30-minute crosses up or if the 2 hour crosses down, and react accordingly. Last thing I wanted to talk about was the VIX. Now, the VIX has been trying really hard to make a floor here, so we are seriously paying attention to that because we were paying attention to the yen carry trade, and something fishy that was going on was, I'd have to talk about this more during the live show because I need to really have something written down to talk about it. But the Fed did some kind of test on Friday, which I think is very interesting because it allows banks to move around money, right? The repo market, they're allowed to move around money in certain ways, which can cause some potential delay in reactions, right? Potential delay. Now, that delay can take up to a couple of hours, but that delay can take up to potentially 24 hours. Now, why am I talking about this? Well, because Japan, the Bank of Japan was just forced to raise rate to 0.5. They haven't done that in a long time. In the yen carry trade, people have been borrowing the yen, turning it into USD, and then investing it in wherever they would like in other markets other than Japan, it seems like. So the thing is, they got an inflation rate of 3.6, right? 3.6. That is higher than what they expected by a pretty good amount. This means that if that trend continues, they're going to have to keep raising. And eventually, the yen carry trade, if a lot of exposure is there, which some people in the chat said potentially trillions of dollars, that's risky. And volatility was giving us the basing out signals, still holding on Friday on the MACD with triple divergence here. We do see that the RSI was able to violate 1 point though. So just be paying attention to that. This could be multiple point because of the good reaction here. So what we're looking for from volatility is, can the 30-minute go positive? Can we actually see this 2 hour end up going positive as it continues to reject these curl downs and you're making a pretty good floor? And then ultimately, if you're going to see big selling come in, right now I'm kind of leaning towards, we're going to see some kind of volatility and then that might subside. But if you're going to see volatility seriously come in, then it's going to stick, it's going to keep going up, and you're going to cross up this daily MACD. So I think it's something to be aware of. As of right now, with how it stands, with the price action we have right now, we have not seen any reaction due to the yen carry trade really at this moment in assets. So what we want to, except for maybe the JPY getting some indecision but trying to go up, and the dollar coming down pretty rapidly there. Okay, still the most likely thing with the price action, technically not price action, but with the price action across the board that we do have, is that this is going to end up actually down towards 1212, and then that is where we are more likely to make some kind of major top, maybe going into March of this year. So that's what I'd be paying attention to for volatility. This is still the most probable thing with the price action that we have, but we have built a pretty good floor to see some volatility pop in this early on this week, and we'll be paying attention to it, and we'll look for other signals that maybe hint that it could be some kind of trap. So thank you guys so much for watching this video. I really do appreciate it. We do have to take off pretty quick here, but I do appreciate it. If you want to get to learning, the course down in the description is 90% off. You can literally learn the full technical analysis, right? What trades we actually like to take around weekly expected move, what those are, a strategy for it, how to really place those, what are the triggers, what are the reasons for a trade. So much info, man. So much info that has really helped a ton of people, and we just hope that it can help you as well. If you have questions about it, join us in the live show. I'd love to see you there. I'll answer any question you ask. Thank you guys so much for joining. Thank you for subscribing. Appreciate you guys being here, and I look forward to streaming with you guys this week. Good luck. Peace out.